Thank you.
Like that?
Yeah, no, in this case we'll start.
Oh,
You know this part where Fatra appears?
yeah.
Fatra logo.
Hello and welcome everyone. Here we are with the fourth episode of Fatra Podcast, where we are exploring the future of SME financing in the GCC region and beyond. I'm Mehdi Alizadeh, the co-founder of Fatra, and today we are diving deep into a subject that is reshaping how the capitals flow to small and medium businesses, which is debt tokenization. For those unfamiliar, Fatra is building a business-to-business buy now, pay later platform that helps to extend loans and breach the $250 billion SME financing gap within our region alone. And we believe that tokenization is that infrastructure layer that will help us to attract both institutional and retail capital at the scale. And in fact, there is no better person to help us unpack this potential than our guest today, Dr. Claus Skaaning, the CEO of DigiShares, which is our, in fact, tokenization platform partner as one of the very well-respected platforms in the region. So, Dr. Claus, thank you for joining us. And also, I have my co-host with me today, Dr. Khalid Al-Hadrami, with us.
Thank you, Doctor.
Okay, so without any further ado, I would like to move on to the first question for Dr. Claus today, which is, I would like to know, how would you describe DigiShares to investors who are new to the concept of tokenization?
CEO and one of the co-founders of DigiShares. I have a PhD in computer science and have started several companies over the years. This current one, DigiShares, we've been working on now for 7 years. We were one of the first companies who started developing infrastructure for tokenization, and today we are also one of the biggest, I would say, in terms of market share. It's important to understand that we are a pure tech provider, so we don't compete with our clients, we don't tokenize anything ourselves. We only focus on providing high quality technology that can be used in the back end to power any kind of tokenization application, I would say. So it's basically an end-to-end platform for tokens and for users with a lot of functionality, a lot of customizability, a lot of configuration options, and we provide it basically as a software as a service company. I think that's a short description.
Sure, that will do. So, Khaled, could you please?
So thank you, Dr. Claus, for this introduction. So we'd really like to know, for our non-technical investors, for example, I mean, what does a token represent when we're talking specifically about our type of investment product, which is debt tokenization? So can we explain to them in a more layman terms what debt tokenization means, if you can help us with that?
Yeah, so the token represents some kind of investment opportunity, I would say, an investment object or a fraction of an asset. In this case, it's a loan, so you could say the underlying asset can be different things, right? But then you have different ways of gaining some kind of investment relation to it, or investment interest in it. One way is, of course, to have equity in a company that owns the asset, right? That's what a lot of our clients do. The other way is to have like a debt or a loan instrument, right, where the token would represent a fraction of the overall loan that is provided by the investors to the company that is managing the asset, the underlying asset, right? So if you have a total loan maybe of $1 million, could fractionalize this into fractions of 100 or $1,000, and each token would represent one of these fractions. So if you have the token in your wallet, it means that you have basically borrowed $1,000 to the company, and the company owe you this amount of money, right, and will pay you interest, possibly, right, as long as you keep the loan. You also have the possibility to trade it, so you can in principle transfer the loan to someone else if you if you sell it, right, say someone else takes over the loan obligation, you can trade it. So you have a lot more flexibility if you represent the loan or the debt instrument as a token.
Okay, so the next question would be, in your view, Dr. Claus, how do you see tokenization being structurally different from traditional lending or crowdfunding?
That's a good question. I think that tokenization makes it much easier, I would say generally, right? So it increases the flexibility and the ease of use to turn anything into an investable object, right? So that's what we see across the tokenization space. So there's so much innovation, right? Anything that has some kind of yield can be turned into an investment, and you can use loan or debt to invest into it, or equity or revenue share or profit share or anything else. So the tokenization element really makes it much easier and much more flexible, right? So you can suddenly very easily represent the loan as a token in your wallet, and that sort of indicates who has the loan obligation, and you can trade it, you can get yield on it, right? And you can transact it yourself in a digital way without using bank technology, right, for instance, or banking access, right? So all of this stuff can be done by a software company or a company like yourself outside the existing traditional financial ecosystem, which of course will make it less expensive, much faster, more transparent, and more efficient.
You mentioned something very interesting over here, Dr. Claus, which is the yield disbursement. I mean, a lot of investors who are following this episode would definitely want to know, how do smart contracts play the role specifically in the aspect of yield disbursements? I mean, investors would definitely will expect yields based on a quarterly, biannually, or an annually arrangement. Therefore, they would want to understand how can smart contracts specifically play a role in this segment of our business model.
Yeah, the smart contract is part of, you could say, the infrastructure behind the token itself. When you originally mint the tokens, you also define the set of smart contracts that will in the future be used to regulate the token. So you could say if you hold the token in your wallet, you will have some rights and some obligations and some restrictions. All of that is enforced by the smart contract. So in fact, the smart contract will do what in the old days you had human beings doing sort of in the banks and so on, sitting and controlling all of this stuff and doing manually a lot of things like paying out dividends or interest over time. All of this now can be managed, fully automated by the smart contracts. So you have no human errors. You have much more efficiency. You have much lower cost, and you can also do it much more often, right? So you can pay out dividends or interest in principle every day if you want. A lot of companies are doing this because now it's possible to do it. You don't need a human being to sit and push buttons, make calculations. You can have a smart contract do it for you, right? So it automates the process, it makes it much more efficient, and allows you to fractionalize also the task of paying out interest over time to be able to do it very often, right? Which is something that is often seen as very attractive for investors, right? Because they see an increase every single day, every week, every month, depending on how often you choose to do it.
Definitely. I think now usual funds or traditional funds, they would allocate too much resources regarding specifically if you want to choose the dividends disbursements on a quarterly or an annual basis. Now that smart contract will solve that big issue. I think, Mehdi, if you can confirm, that will help companies like us, save those resources and maybe allocate those resources to more integral parts of our business model instead of, trying to allocate those resources just for the fact that, now it's end of quarter one and we need to, distribute the yields. What do you think, Mehdi?
Definitely. I agree with your perspective that it allows a lot of room for us to allocate those funds to some extra use. In fact, to deploy those capitals for more useful purposes. Yes, exactly. You have a point on that.
Exactly.
Sure. So now I would like to move on to the next question, Dr. Claus, which is that, in fact, a sizable group of investors, specifically speaking in our region, are interested or I should say that they require the investment to follow the Sharia compliant aspect. Now, I would like to see how DigiShares possibly can structure those tokens so that they can align with the Islamic finance models to suit their taste and preference.
Yeah, it's a very good question, something that we have discussed on occasion with customers. In principle, the platform itself is fully Sharia compliant, right? Because you have a lot of flexibility on how you choose to pay out the dividends or the interest over time. So you can pay it out as interest, right? But you also have the option in principle to burn tokens and in that way increase the value of the existing tokens that are in circulation, right? So that might be a way that is more compliant with Sharia. I have to say I'm not an expert, but it's something that we are, of course, very interested in, and we want to be fully compliant. But based on the sort of consultations we have had in the past, we believe that the system should be fully able to support it. Also because you have so much flexibility around how you choose to structure the smart contracts related to yield.
Definitely. At the end of the day, this will attract a lot of the potential investors, and it can align with their taste and with their preferences as well. So I'm glad to know that you guys are at it and you're actually pretty much focusing on this aspect as well. So
beautiful. Yeah, if I may add to you also, gentlemen, it's not adding value to the investors, but let's not forget, Dr. Mehdi, it's all for the borrower side. Many borrowers would like to deal with Islamic finance, based Islamic finance specifically. I mean, they would not like to deal with the broader finance. So my second question, Dr. Claus, is regarding transparency. Now, we said it before in our podcast, and we said it outside the podcast, and we cannot, stress on it enough. We believe at Fatra, transparency is not a luxury when it comes to finance. I know in other services, transparency can be a very nice add-on and can be considered a very nice add-on, but when it comes to finance, transparency is key. And we have discussed this in previous episodes, but I mean, who better than you to discuss how transparency affects or influences the decision of an investor, and what does it bring to the table, Dr. Claus?
Yeah, transparency is an interesting requirement of using blockchain technology, right? So you are almost forced to be transparent, or at least to be more transparent that you were in traditional finance. You still have the option of choosing to which degree you want to be transparent, because you can keep wallets internal, you can keep some transactions off wallets and so on. But I would say the way that the industry is developing, there is a lot of focus on transparency, and I would say the companies are respected and trusted more if they are transparent, right? So it becomes also an important factor. And I would say if you can in principle run your business 100% transparent on tokenization technology, because you can make it possible for users or investors, interested parties to see which wallets you are using within the company, the value stored in these wallets, specific currencies that are stored, and money flows, transactions between these wallets, right? And also, in fact, in relation to the users or the customers of the platform. So, in fact, if you want, you can give complete insight into the business model and how it's running. I think that this might be too much for a lot of companies, because it will also help competitors to see what is going on. But you can choose to what level you want to have this transparency. And I think that it has made some interesting opportunities to see different chains, for instance, or different DeFi applications, right? You can analyze them quite directly and see exactly how well it's going for them, how much business they are transacting, if they are growing or not growing. So it's impossible to hide these facts. So you get a more straightforward and transparent industry, I think, which is good for the investor at the end of the day, for the little man, the user, right?
Sure. Now, moving on to the next question. I guess you agree with me that secondary liquidity is one of the promising, you can say, or compelling aspects of the tokenization process itself. Now, from your perspective, Dr. Claus, how does the secondary market exist as an option for such debt tokens, and how does DigiShares take care of this aspect and integrate it into the tokenization itself?
First, I would say by lifting securities, loans, debt instruments, equity, and so on outside the traditional financial ecosystem makes it possible for software companies and companies like yourself to facilitate trading. Right? So you have the optionality of trading, which you did not have before. You have the opportunity to enable trading, which is something you did not have before. So that's the first step. Right? The second step is then to create real liquidity, and there are many different ways of doing this. Right? You as a company can make liquidity available for users. You can make sure you can always buy and sell these loans. Right? The company can redeem them possibly at a price that makes commercial sense for the company. So the investors will always be able to exit, maybe with some loss, right, for an early exit. So you can make that liquidity yourself in the system. It supports it, and generally it's possible on these types of applications. So that's already some liquidity. Secondarily, I would say we are seeing the ability to use loan tokens as collateral for loans. So you can have like a lending systems, right? That's a different form of liquidity that is coming very fast, I think, over the next few years. The banks will start to support this, the larger firms will start to support it, and sort of there are already existing providers like Aave who are very good at this and will start to go into the security space as well. So that will become, I think, enormously important over the next few years, and in fact it will allow you to get a lot higher capital efficiency, right, and a lot higher usage and value out of your capital, because it will not be just sitting passively. It will be used actively, right, to create liquidity. The third option is, of course, real trading on secondary exchanges. So we are working on setting up exchanges around the world. We have a real estate.exchange in the US. We're setting up an exchange also in South Africa, and hopefully also in the UAE in the future. And we know also that the big players are coming into the space. London Stock Exchange is launching with a platform. New York Stock Exchange announced a few days ago that they would be trading tokenized stocks as well. Nasdaq has announced the same recently, right? They are also coming fast into the space. And I think that we will see existing crypto exchanges like Binance and so on getting the licenses, so they are also able to trade these types of tokens. So I'm convinced it's coming really, really fast, actually. So I think over the next few years we'll see a lot of liquidity, but we will also see convergence, right? So we will see the tokenization market merging with the existing financial ecosystem because they'll be using the same infrastructure. So that'll be quite exciting.
Yeah, sounds like there is a lot of momentum in the near future coming in this aspect, and yeah, so the process is very well thought of, and it's all in the pipeline apparently. Yeah. So
yes, I mean, again, Dr. Claus, you touched on a very important point, which is the distinction between retail and institutional investors coming onto a platform like ours. And definitely people would want to know, and the viewers of this episode would want to know, how differently does a technology partner like DigiShares, when it comes into a partnership with Fatra, how would you handle institutional liquidity providers versus retail liquidity providers? I mean, would they have the same experience at the end of the day, meaning the dashboards and all of the customer journey that they will go through? So if you can give us some in-depth explanation on what is the experience for both segments of our investors.
So by default, they will see the same information about the deals of the opportunities, the investment opportunities in the system. But you can make different options available relating to contracts that they need to sign. KYC or KYB requirements can be different based on the user type. And actually the token itself can also be different based on the user type. In the US, for instance, you have often a situation where you target both US accredited investors and non-US investors, which can be retail. And for that, you have to use two types of tokens in principle if you want to have the full benefit, because the US tokens are locked up for 6 to 12 months, whereas the non-US tokens are immediately tradable. So it's a requirement, I would say, for us to be able to support such a situation, and it can be handled in a number of different dimensions, I would say, in the system.
All right, so the next question would be, there is plenty of choices to take from, and the investors, they can shop around within those tokenization platforms. Now, in your view, what should be the most important aspects that an investor should look for when trying to select the debt tokenization platform? What should they have in mind for such evaluation, in fact?
Yeah, that's a very good question. In my opinion, they should be looking for trustworthy providers, right? So there should be some kind of third-party appreciation, evaluation of the underlying assets. Hopefully some traction, right? Some historic results and so on would be available. Of course, that's difficult for a new player. But then I would say third-party opinions, appreciations for the underlying assets, right? Transparent structure, I think, is important also for trust. Partnerships and so on, supporting partners. I think all of that, I think trust is the most important. I think a lot of people are concerned about that, especially in our space. Unfortunately, there's been some mishaps in the past. Then I think part number two is the yield, right? I think that is what most people are looking for, because they have to hand over their cryptocurrencies to get high yield. That's of course important, right? And then I would say maybe number three factor would be user friendliness, convenience. If it's not extremely easy to use, people will not use it. I think so. It really has to be extremely easy to use. So that's also why I would say over the last couple of years, we've mostly been focused on improving the user friendliness, the usability of our platform, rather than new functionality. I think it has all the functionality that we will need for the next 2 years, but we need to make it as extremely easy to use, right? And we are also developing an app, native app front end, for the same reason, right? So people can use it natively on the mobile phone with a much easier user interface.
Yeah, I agree with all that. Very well said. And if I may add a fourth point, that in fact the reputation, which means whether the tokenization platform itself is licensed and it's compliant with the regulatory frameworks, that's also a factor that plays an important role. In other words, there could be other tokenization platforms, but they're not regulated, they're not licensed, right? So I guess this is one of the most trivial yet very important points that the investors will look into, because that adds credibility and reputation to the platform itself.
Yeah, it's the task of the regulators, right, to make sure that the companies have the processes under control and have good staff and quality in their decisions and their processes, right, and use very solid, secure, stable systems and platforms for running this, right, because it's basically the reputation of the country or the industry that is at stake if everything doesn't work.
Yeah, sure.
Great. Dr. Claus, if we would like to go into more depth regarding the underlying infrastructure, the technology infrastructure that DigiShares use, and that will be applicable for a partner like Fatra. So if we can go and discuss the blockchains that you guys are utilizing at DigiShares, why did you choose those blockchains specifically, and how does it benefit us as an SME credit tokenization platform?
Yeah, that's a very good question. We are chain agnostic, I would say. We support a number of different chains. Normally, most of the chains are on EVM compatible, right? So they are compatible with the old Ethereum chain. So we support Ethereum, Polygon, and Binance Smart Chain. And then we're adding support over the next few weeks for 2 other EVM chains, which is Integra. Integra is a real estate focused chain, actually, which could be interesting for a lot of people. And then we are adding support for injective, which is more of an institutional type chain. And then in addition to this, we are working on supporting Aptos. Aptos is the old Facebook or Meta chain that has become a spin out from Facebook, and has a lot of funding behind it, and a lot of, I would say, muscles, to create distribution channels and a very efficient chain. So that will be announced, I think, within a month or two, that we will be supporting Aptos. And we are speaking to a number of other chains to also support them. I would say for the chain, it's important that they can provide or can offer a full end-to-end solution for tokenization, of course, for the users, and we can, and of course for us, it's important to support as many chains as possible. I would say different chains are good for different purposes. I would say Ethereum and Polygon are sort of good. They can be used. They are general chains, but they can be used for any purpose. Polygon is really inexpensive, right, and very trusted and I would say secure. The old chain, we see a lot of traffic on Polygon, but also on Ethereum. And then I would say Aptos is extremely fast and highly institutional and secure and so on. Same thing with Injective and Integra. So there's a number of choices, right? And in fact, I think often our customers will speak to the people behind the chain to understand the differentiators basically, and make the decision based on that.
Beautiful. I have a follow-up question regarding the chains that you are trying to utilize. So definitely there must be a preference between what retail liquidity prefers to use compared to institutional liquidity, and definitely you are in the loop to understand what does institutional liquidity prefer. And let me make the question harder for you, Dr. Claus. I mean, looking a couple of years into the future, when legacy banks, let's say in our region, who are not currently in the loop when it comes to blockchain technology or utilizing blockchain technology, what chains do you think would they prefer to operate on? So we're talking as a matter of taste of institutional liquidity. What do you have to say?
I'm not allowed to say too much on the topic because we have to be neutral according to the chains that we provide. We have to support all of them, I would say. But I think that I think there will be a preference among institutional investors for semi-permission chains, right, where they have more control and where you could say the nodes, for instance, are run by trusted parties, right? So for Ethereum and Polygon, there's no control over who will run the validator nodes, right? So in principle, the network could, in an extreme case, the network could be jeopardized. You could have a situation where more than half of the validator nodes were run by Chinese companies, for instance, right? That cannot happen for Aptos and some of the other chains, right? Because it's only trusted parties that are allowed to run the validator nodes. So I think that will appeal more to institutional investors than to retail. And then you have different functionalities embedded in the chains that make some applications easier than others. I would say most of the EVM chains are general in nature, and you have to build everything up using smart contracts. But you can easily take functionality of smart contracts from Ethereum and transfer it and translate it to other EVM chains. With chains like Aptos and similar non-EVM chains, you have to build everything from scratch. But often the chain will support a lot of functionality out of the box that makes it easier. So I think that's a very vague answer, but I don't think I can get any closer to it at the moment.
Clear enough, Dr. Claus. Thank you.
Yes, and our next question would be somehow an extension of the technical aspects of the DigiShares infrastructure. So we may have a sizable number of investors, be it retail or institutional. Now, I would like to ask you, what is the capacity of DigiShare as a platform to handle those number of LPs, both in terms of their onboarding process and in terms of the ongoing yield distributions? Is there any limitations on that?
Right, but we can scale it up by using more computers, more compute power. So in principle, it can be scaled as high as needed. I think the biggest customer that we are running has around 100,000 investors signed up and participating in funding rounds. I think that's the one that with the most traffic. So we had to make a lot of performance optimizations to support this client that will hopefully also make the system very scalable for even larger clients.
Okay, so in other words, throughput is not a concern here, and it can easily scale. Now, how about the amount of investments? How low or how high it can be? Is there any lower or upper threshold on the investment per?
No, there's no threshold because it doesn't really impact the performance of the system, right? So we have companies working on extremely high value assets and also others working on very low value assets, right? So I think the lowest we see is around 100,000 euros for an asset. The highest is maybe like 500 million. So it varies a lot, but it makes no difference for the platform, because whether you have 1 million tokens or 100 tokens makes no difference. It's the same compute power that is required.
All right, so with all that, we are reaching to the end of our podcast today. Thank you very much, Dr. Claus, for joining us today. And I would like to add that we are really trying our best to tackle the SME financing gap, which is really a big concern, and it's really a massive problem to be solved. And we believe that debt tokenization is not just a buzzword, it's not a speculative technology, it's in fact a real applicable solution to these problems.
With the right partners.
And definitely it all can happen.
Yes.
Surely it can all, get realized with the help of a trustworthy tokenization platform. And that's where DigiShares comes in as our partner. So Dr. Claus, would you like to add any remarks?
Thank you very much for having me here. It's a great pleasure. I would say that I very much agree on the SME funding gap. I think it's a global problem actually, and also in my own country, it's a big problem. So you can maybe expand to other countries when you are off the ground.
Sure. Thank you so much, Dr. Claus, and thank you, Khaled.
Thank you,
my
Dr.
co-founder here.
Thank you.
And see you next time in the next episode of Fatra. All right? Thank you.
Thank you.
Have a good day.
Thank you.